What's happening to our economy? Financial experts like Danielle DiMartino Booth reveal crucial indicators you cannot ignore.
Absolutely. Today we have in-depth insights from top analysts including Danielle DiMartino Booth and the Reventure team on market trends affecting investors.
We've harnessed AI to summarize their expertise into bite-sized, actionable insights that save you time while giving you the latest in finance.
So stay tuned. We kick off with Danielle's analysis on how Fed rate cuts could reshape everything, from borrowing costs to consumer spending.
And don't miss the deep dive into the urgent mortgage defaults issue that could unravel the housing market.
Plus, insights into Argentina's economic collapse and its ripple effects across the globe. You won't want to miss this.
Today, we're diving into an insightful analysis by Danielle DiMartino Booth regarding how expected Federal Reserve rate cuts could impact the economy and investor behavior.
Danielle highlights that these cuts might lead to changes in borrowing costs that can ripple through the economy.
Danielle DiMartino Booth asserts that rate cuts by the Fed are generally viewed as tools to stimulate economic growth.
She points out that lower rates can lead to cheaper borrowing costs for both consumers and businesses. Danielle notes that as rates decrease, consumers are more likely to increase spending, thus driving economic activity.
This behavior can stimulate growth, particularly in sectors like automotive and housing. According to Danielle, the announcement of rate cuts can lead to increased volatility in the markets as investors recalibrate their expectations. Danielle predicts that effective rate cuts will likely lead to a short-term rebound in economic growth.
However, she also cautions that markets may take time to adjust fully, presenting challenges.
Danielle concludes by emphasizing that while rate cuts hold promise for stimulating the economy, careful attention must be paid to inflation.
She encourages investors to focus on sectors that may thrive in a lower rate environment, such as real estate and consumer staples.
Today, we're analyzing the recent warning from the U.S. government regarding mortgage defaults.
The Reventure Consulting team highlights that these rising rates are a cause for concern.
Rising mortgage defaults could indicate stress within the housing market.
This trend may lead to fluctuating home prices and lending conditions. The Reventure Consulting team indicates that the current levels reflect financial strain among many homeowners.
This could signal potential economic repercussions beyond individual households.
If mortgage defaults continue rising, a drop in home prices is likely.
Potential buyers may hesitate due to rising financial concerns.
What do analysts predict for the mortgage market's future?
While government actions could stabilize conditions, without them, a downturn may continue.
Reventure Consulting stresses the importance of evaluating financial health amid rising defaults.
Additionally, they recommend that potential buyers remain vigilant about market changes.
Today's topic focuses on the economic crisis in Argentina and its broader implications for the global community, as discussed by the Eurodollar University team.
The team addresses issues like Argentina's fiscal policy and rampant inflation, explaining how these factors might influence global markets.
The Eurodollar University team cites fiscal mismanagement as a central factor contributing to Argentina's economic difficulties.
The team emphasizes the role of peso devaluation in complicating import costs and exacerbating inflation.
By referencing past economic crises, they caution that Argentina's current troubles could precipitate global market instability.
The Eurodollar University team indicates that hyperinflation is severely degrading consumer purchasing power in Argentina.
With prices escalating, many individuals find it challenging to purchase basic necessities, leading to widespread unrest.
The team provides insight into how peso devaluation has led to significant increases in import prices.
This escalating cost has made foreign products unaffordable for many consumers, intensifying economic challenges.
The conversation includes historical contexts, drawing comparisons from past crises that had global repercussions.
The Eurodollar University team warns that without action, history might repeat itself, potentially affecting the global economy.
The team discusses potential consequences for other economies in light of Argentina's crisis.
They predict that Argentina's escalating issues may lead to widespread instability for countries facing similar vulnerabilities.
The Eurodollar University team firmly recommends that policymakers take urgent action to stabilize Argentina's economic condition.
Investors are encouraged to evaluate their risk exposure to emerging markets amid potential global economic challenges.
Today, we're examining the implications of recent comments made by Warren Buffett concerning the housing market, particularly with a focus on Lennar's pricing challenges.
Buffett warns about potential home price declines, which carries significant implications for homebuyers and investors.
Warren Buffett notes that Lennar's pricing strategy could face pressing challenges, particularly if market conditions shift.
He calls attention to the need for caution in real estate investments due to emerging signs of overvaluation. Experts debate how Lennar may need to modify its pricing strategy if elevated interest rates continue to hinder buyer activity.
What repercussions might this have for potential buyers?
This situation could instigate a notable change in home buying behaviors.
What forecasts do experts have for the housing market amidst these challenges?
Experts predict that home prices could further decline as the market adapts to new conditions.
In conclusion, the emphasis on strategic financial planning is crucial.
Home buyers may wish to delay purchases until the market becomes more favorable.
Additionally, for investors, maintaining caution and considering a diversified portfolio is vital during these unpredictable times. Today, we're exploring insights into the market dynamics influencing gold investments.
Market analysts highlight significant risks that investors should consider.
Analysts are noting a notable increase in interest in gold as a safe haven.
However, there's concern that speculative behavior could lead to market corrections.
Experts recommend that investors consider gold amidst ongoing economic uncertainties.
Gold is viewed as a staple in protective investment portfolios. Strategic diversification is critical to manage investment risks effectively.
Focusing on long-term fundamentals can lead to more informed investment decisions. Experts predict ongoing volatility across multiple sectors.
Future shifts in monetary policy are expected to influence market valuations.
In summary, investors should consider gold for its stability.
Diversity in portfolios will help mitigate potential downturns.
Welcome. Today, we're diving into an insightful analysis presented by Axel Merk, shared with David Lin, on what could be the greatest mining opportunity in a generation.
Axel outlines the current market conditions and why now is a strategic time for investors to consider mining investments.
According to Axel Merk, the mining sector presents unique opportunities that could yield substantial returns for investors.
He mentions that as demand for minerals increases, there could be a shift in investment dynamics favoring mining. Axel highlights that advancements in technology mean industries increasingly require more minerals, leading to robust demand.
This demand implies a lucrative opportunity for investors in the mining sector. Merk asserts that in current economic conditions, investors are looking more towards commodities as a hedge against inflation.
This shift could lead to increased capital flowing into mining stocks, which may appear more attractive due to inflation risks. Merk points out that today's prices are favorable for investments compared to historical averages, suggesting it might be the right time to enter the sector.
His analysis encourages investors to consider the long-term benefits of early investment in what he describes as a generational opportunity. What does Axel Merk foresee for the mining sector in the coming years?
Merk predicts that investments in the mining sector could increase significantly, responding to rising demand.
He also suggests that potential shortages of key materials could raise prices, enhancing the attractiveness of mining investments. Axel Merk concludes that the mining sector could be pivotal for growth in investment portfolios moving forward.
He suggests that investors diversify their portfolios by including mining stocks and remaining engaged with commodity market trends.
It's crucial for investors to stay informed and flexible as opportunities in this dynamic sector arise. What an insightful discussion we've had today, with some remarkable perspectives.
Indeed, each guest brought forth valuable insights on varying sectors of the economy.
Axel Merk's take on the mining sector shows potential for investors, especially during these turbulent times.
And let's not forget the emphasis from the market experts on gold investment as a safe haven. It seems there's a strategic consensus on being prepared for market corrections.
Right, but the disagreements were also noteworthy. For instance, while Warren Buffett warned about challenges in the housing market, others like Danielle DiMartino Booth remain optimistic about the Fed's influence.
That's a crucial divergence. It really highlights how different interpretations of data can lead to contrasting investment strategies.
Absolutely. And speaking of strategies, if you were intrigued by these discussions, don't forget to give us a like and subscribe.
Yes, your support is vital for us to bring more expert analyses straight to you.
Join us for our next video where we'll tackle global economic trends and their implications. You won't want to miss it.